but I am pleased to say, as you will hear shortly from our chairman, we covered some very substantive items, issues today. So without further ado, I'd like now to introduce you to the chairman of the Monetary Council, Dr. Ellis Lorenzo Webster, who is the Premier and Minister of Finance for Anguilla. Chairman, over to you, please.
Thank you, Governor, and good afternoon to all those in the room and those who are on social media platforms. Certainly a pleasure to be here, and I want to thank Governor Timothy Antwine and his management and staff of the Eastern Caribbean Central Bank for being here for the 108th meeting of the Monetary Council. As you would have said, I was assumed the chairmanship of the Monetary Council today, and it lasts for a year, so be gentle with me. I'm going to go ahead and read to you the communiqué, which will be circulated in the near future. And first I'll start with who are the participants. We had the council members attending the meeting were myself, Dr. Ellis Webster, Premier Minister for Finance, Anguilla, and the new chairman. The Honorable Gaston Brown, Prime Minister and Minister for Finance, Antigua and Barbuda. We had the Honorable Lennox Andrews, Minister for Economic Development, who joined virtually. He's from Grenada, understanding that Grenada and St. Vincent and the Grenadines are recovering from the devastation of Hurricane Beryl. He joined virtually. The outgoing chairman, Mr. Honorable Camilo Gonzalez from St. Vincent and the Grenadines, Minister of Finance, he was unable to make it or join us due to internet issues. We also had present the Honorable Joseph Easton Farrell, Premier and Minister for Finance for Montserrat, Honorable Dr. Terence Drew, Prime Minister and Minister for Finance, St. Christopher, St. Kitts and Nevis, and the Honorable Wayne Gerard, who is a Minister in the Ministry of Finance, St. Lucia, and alternate council member for St. Lucia. The Honorable Dr. Irvin McIntyre, Minister for Finance, Commonwealth of Dominica, was unable to join us today. In terms of the meeting itself, I'll read the communique. The 108th meeting of the Monetary Council of the Eastern Caribbean Central Bank, ECCB, was held on 19 July 2024 at the Aurora Anguilla Resort and Golf Club, following the ceremony to mark the change in chairmanship of the Monetary Council. Monetary stability. The Monetary Council received the Governor's report on monetary, credit, and financial conditions in the Eastern Caribbean Currency Union, the ECCU. The report, titled Pushing Ahead Amidst Increasing Global Turmoil and Uncertainty, provided global and ECCU updates on monetary, credit, and financial conditions for the first half of the year and assessed their potential impact in the near to medium term. The Governor's report indicated that A, both international and regional recovery from the pandemic remains remarkably resilient. B, over the medium term, the global economy is expected to underperform relative to the historical trend. Unabating geopolitical conflicts increase uncertainty that threatens global and regional prospects. C, global headline inflation is expected to fall to 5.8% in 2024 from the 6.8% estimated in 2023, and those statistics from the IMF in 2024. The ECCU inflation has eased significantly, but threats loom from ongoing geopolitical issues that are impacting trade. D, here in the ECCU, risks are tilted to the downside, notably the above-average Atlantic hurricane season, volatility in revenues from citizenship by investment or CBI programs, inflationary pressures, and geopolitical risks. E, the ECCU's total foreign exchange reserves stand at $5.2 billion EC. The EC currency remains strong, with the backing ratio reaching levels not recorded since 2020, that is before the pandemic. The backing ratio is approaching 97%, 96.64% as at the 12th of July 2024, up from 95.13% at the 9th of February 2024. F, having considered the state of monetary, financial, and credit conditions in the ECCU, and on the recommendation of the Governor, the Monetary Council agreed to 1, maintain the minimum savings rate at 2%, and 2, maintain the discount rate at 3% for short-term credit and 4.5% for long-term credit. The minimum savings rate is the lowest rate that commercial banks can offer on savings deposits. The central bank's discount rate is the rate at which the ECCB lends to governments and commercial banks. Financial stability. The Monetary Council was advised of the following developments in the financial sector. A, the ECCU banking system remains resilient and stable with a high degree of liquidity. Monetary aggregates, that is money supply, continue to expand at a healthy pace, contributing to buoyant levels of liquidity. This is likely attributable to improving economic conditions and job markets. B, interest rates have remained low and credit conditions have eased as commercial banks increase lending. C, banks are generally well capitalized and deposits continue to grow. D, Everydata, ECCU Limited, the credit bureau, has signed on 22 of the 25 banks in the ECCU. The go-live date for Antigua and Barbuda, Grenada, St. Christopher, that's St. Kitts and Nevis, and St. Vincent and the Grenadines is the 1st of September 2024. Public education is ongoing throughout the region. In support of financial stability, the Monetary Council approved the following. 1, amendments to the Banking Act 2015. 2, the Eastern Caribbean Deposit Insurance Corporation Agreement and Bill to enhance consumer protection. 3, the legislative framework for the establishment of an Office for Financial Market Conduct and Financial Inclusion within the ECCB to strengthen financial consumer protection. And 4, the revised policy considerations for data protection legislation in the ECCU. Fiscal and debt sustainability. Fiscal performance has improved in tandem with economic recovery. The debt to GDP ratio has declined to 75.7% at the end of 2023 from its peak of 88% at the end of 2020, the first year of the pandemic. Understanding that the threshold or goal is debt to GDP ratio of 60. The Monetary Council stands in full solidarity with the governments and people of Grenada and St. Vincent and the Grenadines in the wake of Hurricane Beryl. Council ratified the round-robin approval of the 8th of July to grant funding of $1 million EC each to the governments of Grenada and St. Vincent and the Grenadines from the Fiscal Reserve Tranche 2 to support their relief efforts. Growth and competitiveness. Regional economic growth is forecast to expand by 5.2% in 2024, compared with the provisional 4.5% recorded in 2023. Growth in the ECCU is being propelled by tourism and construction. The latter activity is bolstered by relatively low interest rates within the ECCU, supporting borrowing, especially for residential mortgages. Almost all of the ECCU countries recorded double-digit increases in tourist arrivals for the first quarter of this year. The ongoing increase in regional airlift is expected to further boost arrivals intra-regionally. Reports received on BACO, CLECO, the ECAMC, and the ECPCGC. The Monetary Council received report number 2 of 2024 from the Core Committee on Insurance in respect of efforts to bring resolution for ECCU policyholders of the failed insurance companies British American Insurance Company Limited and Clico Life Insurance Limited. Council agreed to continue its efforts to resolve the outstanding matters and facilitate an additional payout to eligible policyholders. The Monetary Council noted a report from the Eastern Caribbean Partial Credit Guarantee Corporation, or the ECP-CGC, including ECP-CGC's financial report as of the 31st of May 2024. The ECP-CGC aims to support small businesses in the ECCU. Council also approved the report on the operations of the Eastern Caribbean Asset Management Corporation, the ECAMC. Council agreed to the convening virtually of the 109th meeting of the Monetary Council on Friday, 18th of October 2024 at 9 a.m. That's the end of the communique. I did say who the participants were, and I thank you for your attention.
Thank you very much, Chairman. Members of the media, ladies and gentlemen, there you have it, the communique of our 108th meeting of the Monetary Council. At this time, the Chairman and myself would be pleased to receive any questions or comments on the communique of this meeting. So the floor is now open. The mic is for anyone who wishes to pose a question. And as usual, if you could just say name and media outlet, that would be great.
Yusuf Abdul Ali, Cool FM, 103.3 FM. Good day, everyone. I believe you said that the council agreed upon the amendment to the Banking Act. Could you expound on that a bit?
Yeah, please.
Thank you, Chairman. So the Banking Act came into force around 2015, and it was a very major revision of our banking legislation. And just to be clear, the Banking Act is the primary legislation under which we supervise, regulate all of our banks and licensed financial institutions. So we've been working with this law now for the last 7-8 years. And along the way, we've recognized several improvements that we should make to the existing banking law. So that was the first of two things that the Council approved today with respect to the Banking Act. Revise it based on recommendations we've heard from the bankers and the Bankers Association. We've observed certain things as a regulator, and we propose specific changes just to improve clarity about certain aspects of the law, whether it is to do with definitions, whether it is to do with bureau de change, whether it is to do with related party transactions, and so on. The force of prudential guidelines and standards and so on. So that was the first part. Practical, very important. The second part is extremely important, and that is provisions for market conduct. Essentially, to bring into force, to give the central bank the powers to do financial protection, to regulate the conduct of financial institutions in respect of how they deal with customers, whether it is with respect to bank fees and charges, whether it is respect to certain disclosures, certain service requirements. For example, the Code of Conduct right now, which we issued many years ago, does not have the force of law. The amendments approved by the Monetary Council today will make any Code of Conduct issued by our central bank give it the force of law. So those were very important amendments to the Banking Act that were approved that will really strengthen the financial sector, and in particular how the central bank supervises and regulates. I don't need to tell you, you know the recent experiences we had with Republic Bank on the particular situation. There are powers now, which once approved and enacted, that we do not currently have, did not have with respect to that particular situation. Now, once the Monetary Council approves these recommendations, it now goes forward to the member countries, and they have to be enacted in their parliaments. So we have to get all 8 countries to do that, and we're hoping that it will be done expeditiously. But this was a very, very important decision of the Monetary Council, and I will tell you, certainly speaking for management and staff, we are very pleased that the Council considered and approved these recommendations.
Thank you for that, Mr. Governor. So towards the Premier, can we then anticipate this will be going to the House to approve, and perhaps the persons with the Republic Bank, something may happen to alleviate their worrying in the future?
Well, I mean, certainly once it comes to us, then it goes through our cabinet, then executive council, and then to the House for approval, or for the discussion, consideration, and approval. In terms of what's happening with Republic Bank, as you would know, Republic has made certain overtures to the persons who are affected in terms of that if they come in, that they would work with them in terms of loans, or so that they can meet whatever the losses, that the debits that were done, that there would be no fees charged. What we find is most persons are working with Republic on that. In fact, I had a discussion with the bank manager, Mr. Ralph Henry, just up to last night, and we discussed what's going on. In terms of, there's an investigation being done by the ECCB in terms of what happened and what recommendations can be made. But in terms of something different happening after this, these amendments go into place, it's premature to make any statements regarding that. You had anything else to add?
No, just to say, just to confirm what you said, that in terms of the specific Republic, so they're separate issues, although I know, we have an independent audit that we have commissioned under the Banking Act. That audit will guide us in terms of what happens next in how we treat with Republic, their systems, their protocols, their arrangements, and so on. But I think, to be honest, what happened then, we don't want to see happen again. And that is really exactly the purpose of the legislation, once approved or enacted, will be to minimize the risk of that happening, and certainly to give the central bank powers to address a situation were that to happen. Powers that we do not currently have. We've done what we could do, which is launch or commission an independent audit. But like I indicated, even the code of conduct, which was being referred to, that does not have the force of law. With these amendments, once enacted, it will have the force of law. And of course, we're updating the code of conduct. So it will put us in a better, much better position going forward. So I think we have to look forward rather than back. Not that, I know what happened was very painful. By the way, I was impacted personally as well, just so that you know. So I understood it at a personal level. I too, and several of my staff, our staff at the central bank. But we want to make sure we minimize those things, and certainly we have powers to deal with those things. And again, and I will say the Monetary Council was very pleased to receive the recommendations. So there was strong support. Okay. And hopefully, to your question about timing and timeliness of enactment, that will correspond to very expeditious passage in our parliaments. And we really look forward to that. Thanks.
Carlton Pickering from KCN Television. My concern, and what I've hearing in the streets and talking with people, is about the fees that these banks are charging them on various things. Is there anything that the central bank can regularize that?
Okay, thank you. I'm guided by the chairman. He's asked me to take that. So yes, sir. With the amendments that have been approved, one of the things it allows for is for the central bank to weigh in, cap, and certainly to intervene with respect to bank fees and charges. Right now, the only powers we have are to say to the bank, have you disclosed to your customers? Have you informed them? Have you given them the 30 days notice? No other powers. With these amendments, we will be able to intervene directly. We will be able to assess the reasonableness of some of these fees and charges. And the principle is the fee has to have some relation to the cost of the service, properly assessed. And you cannot see, as we see in some cases now, wide disparity or fluctuation or variation is what I want to say, between what one bank is charging and what another is charging for the same service. And so, yes, Mr. Pickering, eventually we will have the ability to, with this enactment, to regulate fees and charges.
The Eastern Caribbean dollar is pegged to the US dollar for over 40 years now, stabilized. But on the horizon, you're seeing BRICS coming. What are your thoughts going forward?
I guess you used to pepper in Premier Webster, so I'm getting some of it this afternoon.
Yes,
so that's
yes,
okay.
yes.
Happy to respond. we are monitoring that. I think we recognize that the rise of BRICS and the currency, the basket, and so on it's transparent. It's an attempt to address the question of U.S. hegemony, having regard for the US dollar being the world's global reserve currency. The truth of the matter is that still 60–70% of world trade are denominated in US dollars. That is not going to change dramatically anytime soon. So, I mean, if you look at history and you look at how that has evolved, that's not going to change tomorrow. So we will continue to monitor that very closely, as we must, and we are. But I want to remind us as well, the decision to peg the EC dollar to the US dollar in 1976 was premised on the simple fact that the US is our major trading partner. Prior to that, it was pound sterling, the UK. Obviously, trade has changed. And when you speak about trade now, you're talking about tourism, you're talking about foreign direct investment, imports, and a range of things. So the premise, the reason why it's pegged to the US dollar is because the US is our major trading partner. If you think about it, to buy imports from the US, you have to pay in US dollars. That means you have to hold US dollars, foreign exchange, hard currency, to do that. That happens in the background now. So you go to your bank, you ask your bank, you want US dollars, the bank will, you bring your EC, the bank will give you US. If the bank doesn't have it, the bank will come to the central bank for it. That happens in the background. You don't see that, but we supply that. But you must have that to buy imports. The things that we import in, the flat screen TV, the vehicles, even though they're coming from Japan or the US, they have hard currency. But then there's also the issue of our debt, or external or foreign debt. Most of that debt is denominated in US dollars. In the currency union, at least 85% of that debt or foreign debt denominated in US dollars. So again, if you're going to pay that debt, you have to pay it in US dollars. So there's nothing simply ideological, if you will, about our positioning. These are very pragmatic issues. We have to have hard currency, particularly US dollars, to purchase imports and to pay our debt. And that is why that link is there. But to answer your question in short, in sum, we continue to monitor that. And we also understand that nothing in life stays the same forever, and there may come a time where we have to revisit that, and if so, we will. But at this moment, there is no change planned. We simply just continue to monitor.
Again to you, Governor, because the Eastern Caribbean Central Bank some time ago has been in discussion with Barbados. Barbados wanted to come to join that bank. Can you give us an update whether ongoing discussion or what's the state of affairs?
There are no discussions. And during my tenure as governor for the last 8.5 years, there have never been any discussions about Barbados joining the currency union. It is true every now and then I meet someone in the streets or in an airport terminal who asks me about this, but this is not an active discussion. Again, especially for our younger people, and Mr. Pickering knows this, there was a time when we shared a currency authority with Barbados. In 1965, we had the Eastern Caribbean Currency Authority, and we shared the EC dollar with Barbados. In fact, ECCA was headquartered in Barbados. Barbados got independence in 1966, formed a central bank in 1974, I believe it was, 72 or 74. And basically, we had to move. And that is how we moved from Barbados and ended up in St. Kitts and Nevis. And then eventually, the central bank, well, the ECCA became a central bank in 1983. So we have that history together with Barbados. But Barbados has, has gone on its own for a long time now, and so have we. So I think what we are focused on is more strengthening the cooperation. I want to, for example, be able to see citizens and residents use EC dollars more freely in Barbados, because we have very stable currency. And some shops accept it, some maybe not so much, but I would like to see a more widespread coverage of that. That is a discussion that we have just begun. So it's very early. I don't want to make any commitments on that. But certainly in terms of Barbados joining, that has not happened at the technical level, nor do I think I've heard anything at the political level.
My final question to you, Governor. Public education, or say financial literacy. I know that the central bank has started this ECCB Connect, which is a very good program. The comments that I get when I aired it here in Anguilla, it's very good. Is this something that you're going to, as you go forward, be promoting more for public education?
Well, thank you very much for the compliment, which I'll pass on. And I think the Director of Corporate Relations, she was somewhere around Shermilan, who has that team. I'll pass that on to the team, because we're very pleased that you are using your platforms to share those programs. And I will say, in case you didn't know, it's an award-winning program. We got a global award last year for the program. We do want to do more, but I will tell you our challenge. We want to get to scale. We feel even after 22 years of financial literacy, we're just scratching the surface. So we're looking for partners, and we're also looking for even more effective ways to get the word out. One of the things with AI promises a lot, but one of the things I am certainly keen to see AI do is to help us with personalized financial advice. I really think our people could benefit from personalized financial advice. And so we'll be actively looking, and I hinted at that this morning in my remarks about the possibilities. We'll be actively looking to see how that tool could be used, could be leveraged to really scale up impact, have a bigger impact on financial literacy and resilience in Anguilla and in our currency union. Because I find even, no matter the education level, I see that all levels. So we think financial literacy is about the illiterate. It is not. There are people educated with advanced degrees, frankly spoken, and not as financial literate as we would think. We also were discussing earlier, Premier Chairman, the issue of investment and how we get our people to do more investment. I don't know if you want to comment on that.
Certainly.
And that requires a certain level of financial literacy, because we want to see people, we want to boost and improve wealth creation in our country.
Yes, certainly. Thank you, Governor. Yes, that was one of the discussions during the meeting. Several of the council members were concerned that as you grow up, you're told to, you have a job, you work, you put some money into a savings account. You don't really gain wealth like that. The consideration should be that there is more emphasis on financial education and financial literacy in terms of investing, so that we can invest in stock markets, invest in mutual funds. And Governor did raise that right now there are available mutual funds where you can get a good return on your money rather than just the 2%, which is the minimum savings rate. And so these are considerations, and I know that some of the member countries are looking at how they can empower their own young people so that they can now have access to funds that they can invest, and by doing so, increase the wealth, generate wealth in among their own people. So that's a consideration that we also took away, those are good ideas that we need to develop on. We have to learn how we can have our young people especially become wealthier. Not wealthier just because they have more money that they can have discretionary funds to use, but wealthier so that the country itself benefits when our people have more wealth, because then the economies benefit from that. I think all of society benefits in that regard, and then there's less need for the social and public assistance. That funding can then be used to develop other programs which can help our people to become entrepreneurs, to become, more professionals. And so those are the things that we discuss. So not everything that we discuss is on the communiqué, because sometimes we discuss things that are good ideas that then now taken back to the central bank, and they work on how to make these become proposals, which then can be developed by the council.
Cool FM, my third and last question. We have you here, Mr. Chairman, for at least a year, so my question will be directed to the governor. Seeing that we have the geopolitics and everything that's going on, and our dollar has been pegged to the U.S., has there ever been a talk or consideration of abandoning the fiat system and adopting gold standard throughout the region?
No, there has not been. There has not been. So the gold standard was abandoned, I believe, 1972. I think during the Nixon years presidency, and no, there hasn't been. What we have seen is there is more investing in gold. So what we saw with inflation, for example, in the last 2 years, some authorities, including the larger central banks, not the smaller ones, and we were considered a smaller central bank, have considered investing in gold. Some of them have legacy gold. They had, from the gold standard era, they had gold. So they've kept that. And then we've also seen some of the largest central banks purchase gold as a store of value and a sort of hedge against inflation. In the last 3-4 years, we have seen an increase in gold. And if you look at the gold price, it has also been increased. I haven't checked recently, but it was probably close to $2,000 a pound, an ounce, and so on. Of course, there are different grades and so on. So we did a survey because it's something we've looked at from time to time for our central bank, investment policy. Our investment policy allows us to invest in gold, but traditionally we have not. We've looked at this at least 2 or 3 times in the last few years. We've asked ourselves the question. We've actually done a survey as well, including other central banks in the region and elsewhere, to see what they're doing and if there's anything we could learn from. Our position is still not to proceed with gold. I mean, there's storage, but you can find a way to store. You can rely on other central banks to do that, the large one. For example, a lot of the gold stored by central banks or for central banks is in the Federal Reserve in New York. They have quite a lot of the gold there. So you can pay for a storage service and so on. But that is something, we'll continue to look at. We keep an open mind to these things. Notwithstanding what we did before, there are times when you have to be prepared to shift, and we do examine these things. But no return to the gold standard, and certainly we have not invested in gold.
Is anybody monitoring online to see if there are any questions?
Yes, we should check. Anybody on?
No? All right. If there are no further questions at this time, I just want to say that we had a very robust meeting, and there are several good initiatives and proposals coming out of this meeting that will be developed by the central bank that will benefit the people of the Eastern Caribbean Currency Union. So I want to thank you for coming. Governor, I want to thank you for your contributions and participation, and thank your staff and the management at the ECCB for the hard work that they've done and that I look forward to them doing during the coming year.
Thank you very much, Chairman, and just to say that you are welcome to visit our campus at any time. And it will be our expectation that you will make a formal official visit to campus during your tenure as chairman.
Yes.
We would love to have you come to a town hall with our staff and have an engagement with our staff. But we're at your disposal during your tenure. And to join you in saying thank you to everyone, including some of our staff or colleagues who are in the room who've worked really, really hard with Anguilla, their team in Anguilla, to pull off these meetings. Thanks for your great hospitality as well.
Thank you.
Thank you, sir.
And thanks to the media, and thanks to the people who came earlier. Thank you, Governor. Appreciate it.
Well done.